I'm joined now in studio by Eren Peleg, Chief Investment Officer at Clarity Capital. Thank you very much for being with me today.
Pleasure to be here.
Let's maybe pick up on Andy's point. Some people say Hillary Clinton represents a sort of stability to the markets. We know what her policies are, while Trump is traditionally expected to be more of a risk taker or a risk in and of it himself. Would you agree with this separation between the two?
Yes, generally yes. Clinton clearly not only do we have a better idea of what she's planning, but it's also very much a continuation of the current administration as well. So it's very much status quo, and we have a better idea. Trump, on the other hand, is very much a break from what we have at the moment. And in addition to that, we're not really sure what his plans are. He keeps on going back and forth. There's certain elements that are kind of clearer than others, but there's a lot of uncertainty about his future policy, and markets don't like uncertainty.
And speaking of markets not liking uncertainty, the Federal Reserve, which we're discussing extensively today on the show, there are these assumptions that stability is also an important factor for the Federal Reserve. Can they react differently, and how differently, if Clinton is elected as opposed to if Trump wins the election race?
So I think the issue is it's not that much in the short term. I think whether Clinton or Trump wins, it's very much what the market reaction is. Because, I mean, the Fed, as I think was already perhaps, Andy said, has talked about December as a likely kind of point where they might look to raise interest rates. So that's kind of what they would want to do. The question is, does something get in their way? Now, Clinton, as we said before, is very much status quo stability in that respect, and the market would be more of a benign market outcome. Trump, if we get that kind of, if we get that outcome, create more uncertainty. If markets react in a kind of more panicky way, then that might prevent the Fed from being able to raise rates in December.
So a potential Hillary Clinton victory could see the Fed raising interest rates?
I think that if Clinton wins, very likely that the Fed will raise rates in December, yes.
And the market is currently pricing in just one additional 25 basis point rate hike in 2017. Do you agree with this assessment?
So, I mean, the market is pricing, first of all, a very good chance of a rate hike in December, still around 70% as of this morning at least. And then one additional rate hike, 25 basis points during 2017. To me, it seems a bit on the low side. I think that, I mean, the reason why people, I mean, definitely the Fed should not be aggressive in raising rates because the world economy is still growing fairly slowly, fairly fragile. And also remember that central banks elsewhere around the world are still easing monetary policy to a large extent. All these things limit the extent to which the Fed can raise rates. But having said that, data in the U.S. has improved recently. I think it was last week, we got a revised number for the Q3 GDP number, which was revised up to 2.9%, which was better than the last couple of quarters. So data in the U.S. is better, and the Fed are also worried about the tightening, especially labor market, which might push rates and wages up. And so I think there's a good chance that we will see rate hikes. I think one increase in 2017 is a fairly low bar to surpass.
Eran Peleg, putting things in order for us as to who might win, and we'll see. Thank you very much for sharing these insights with us.
Thank you.